Well, I don't know if you knew this or not, but we have another with this new update that's coming on our vehicles. If you have one, the over-the-air update, according to Sawyer Merritt, you can now increase your Tesla auto wiper sensitivity, and auto park can park in smaller spaces. So Tesla is leveraging user input to feed the neural net and machine learning models in solving auto wipers using just vision. That's I I think it's a sincere reporting of what's taking place, but I think it's kind of funny. Well, there's not much else funny this morning as the hits keep coming from the mainstream media. Barons should be ashamed of themselves, but the headlines, you can't make this stuff up. And this is a day later after a very clear understanding of what took place with regard to those chips yesterday. But here's the headline. Elon Musk isn't making vote on 50 million pay package easy on Tesla investors. And then the first paragraph, we got investors might assume that Tesla CEO Elon Musk would be on his best behavior ahead of the vote, potentially rewarding him with some 300 million stock options, currently worth about 50 billion. That doesn't seem to be in Musk's nature. Instead of focusing or appearing to focus solely on Tesla, he is charging ahead with new non-Tesla ventures and even borrowing some Tesla equipment to spur them along. Musk's recent action shows why Tesla investors love and fear their iconoclast leader. Oh, so such writing. On Tuesday, Musk confirmed that his new artificial intelligence company, XAI, was using NVIDIA chips sourced from Tesla. Tesla had no place to send the NVIDIA chips to turn them on, so they would have just sat in a warehouse, wrote Musk in a post on X. Wait a minute, where's the part about they only changed it by 2 to 3 months at a point where Tesla would need the chips? Oh my goodness, it drives me crazy. Anyway, Ron Barron was on Squawk this morning singing the praises of Elon and the compensation deal. Of course, he and his funds have enjoyed a 20 times return on their investment since he started investing in 2014. He is currently looking for a 4 to 5 times increase from here over the next few years. Of course, that would put the stock at about 800, something 750, something like that. He called it the most obvious way going forward would be to approve the Tesla deal, the new deal. And he says, what do you think he says? He says, a deal is a deal. That's how he was trained up. That's how his first mentor told him. You don't even need a contract. It should be a handshake. And I think you agree with that as well. Tell me in the comments below if you think that this handshake deal, oh, no, it was a contract. If you think this contract should be honored by the Tesla stockholders today. But again, it doesn't stop. The hit jobs keep coming. At least most of this next one seem factual, even though let's just take a look. These early Tesla bulls are giving up on the stock is the headline. Some of Tesla's institutional shareholders are getting out, convinced that the electric car maker's days of dizzying growth are in their rearview mirror. I don't think that they went out and talked to any of these people to find out that they thought the dizzying growth was in the future. Was not in the future. The company shares are down nearly 30% this year, fallen by more than 50% since their 2021 high, wiping out $600 billion in market value. As Elon Musk has struggled with fierce competition and falling sales. Well, I don't think that's unfactual, and I think you could make that conclusion. I think you could just as easily make the conclusion that Elon Musk is struggling with a hitch in the S-curve, and almost every single BEV manufacturer is struggling over the last 6 months with falling sales, or at least not dramatically increasing sales. Tesla's first quarter results missed expectations, etc. He started to feel like the fundamentals were becoming detached from reality, said John Belton, a portfolio manager at Gabelli Funds, whose firm sold its entire stake of 65,900 shares that it acquired in 2022. Oh, it acquired them in 2022. We think the stock's it works best when there are auto company fundamentals that justify the stock price. In other words, he hasn't bought into what's going to happen. He's not looking forward to August 8th. Well, all right. Tesla's nearly 14-fold increase in its stock the last 5 years has conditioned investors to hold on during periods of adversity. Well, there's a good statement. This time, however, even some of the company's diehard believers have become skeptical. Of the 18 mutual funds tracked by Morningstar that have held Tesla shares since 2019, 10 reduced their position. Oh, they reduced their position, with 4 slashing their stakes by 15% or more. Oh my gosh. Only 5 added shares. Well, that does sound like a complete runaway. Oh, that does sound like they're just completely abandoning Tesla and they've lost all faith and hope. 15%. That doesn't mean Wall Street has written off the stock. 19 analysts tracked by LSEG now have either a buy or strong buy rating. That's up from 17 in February. The average price target is now 179, about 1.5% more than the stock's closing price just 2 days ago. Others see it differently. Ross Gerber. Oh, they're quoting Ross Gerber, whose Los Angeles-based Gerber Kawasaki Wealth and Investment Management bought 500,000 shares more than a decade ago, has been selling steadily this year. I think the story is over, is the best way to say it, says Gerber, who has whittled his position down to a mere 300,000 shares. Ross Gerber has lost all credibility in the community. You may know that already. Nobody pays any attention to anything that Ross has said, except for CNBC, who also, had Gordon Johnson as their regular for many, many years on the Tesla subject. People are now calling Gerber, Gordon Gerber. So, Gerber's complaints range from Tesla's public relations department and Musk's distractions by political and cultural issues. Of course, Ross Gerber is a left-leaning individual. Yeah, okay, more than that. That's he's butthurt over some of the positions Elon has taken. Anyway, Gerber. Anyway, nonetheless, Tesla remains the world's most valuable automaker with a market cap of $560 billion, where Toyota is only at $333 billion. Both of them, however, made, which it doesn't say in this particular thing, both of them made about $15 last year. Tesla, however, trades at approximately 64 times earnings, et cetera, et cetera. Bullish investors justify Tesla's valuation with a long list of reasons pointing to its technology and fervent fan base. More recent causes for optimism have been the continued push into fully autonomous driving and its inroads into China. The street is looking through this painful transition period for the long-term growth story to emerge, with self-driving a key ingredient, said Dan Ives at Wedbush. Among the most fervent bulls is ARK Invest, Kathy Wood, who is increasing her stake all this year. ARK estimated in April 22, Tesla will be worth $2,000 per share by 2027. Her bear case is $1,400 per share in 2027 based on robo-cabs. All right, let's go on, go past all of this. That article just gets worse and worse. Anyway, no, there's some good stuff in it. Like I said, there's truth in it, but it was, I think, intended to be a hit piece. All right, Scott Walter will be on later today. This is Randy Kirk, and if you hadn't hit I need more subscribers. If you're not a subscriber, could you hit the subscriber? That would be a big help to me today. But I'd also love for you to join Patreon. Richard K. joined up yesterday at the Plaid level. That's $50 a month. Thank you, Richard K. You are appreciated, believe me. And Christopher E. also joined. He is, so we had, again, one per day. Who is going to be today's joiner? We've been getting just about one per day. Maybe we have 2 today. We could double our numbers. Thank you so much, Richard K. and Christopher E. And looking forward to more of you joining up. All right. Now on the economy, Market Watch says the U.S. businesses added 152,000 new jobs in May to mark the smallest increase this year, according to paycheck company ADP. This appears to be another sign of a broader slowdown in hiring. Yeah, the 152,000 is way off the expected number of 175,000. Job gains and pay growth are slowing going into the second half of the year, says Nella Richardson, chief economist of ADP. The labor market is solid, but we're monitoring notable pockets of weakness tied to both producers and consumers. Now, it says here that ADP is not a good predictor of what the government's official numbers will look like on Friday. The government on Friday is expected to report about 190,000 new jobs created in May. ADP said most of the new jobs were created in healthcare, education, and shipping. Big and medium-sized company added all of the new jobs. Small business employment declined. This is a big one to pay attention to. The increase in employment in April was lowered slightly to 188,000. Workers who stayed in the same job earned 5% increase in pay in the last 12 months, ending in May. It hasn't changed in 3 months. It's been at 5%. 5% is way higher, as you know, than the Fed wants it to be. The Fed would be happy at 3% for pay increases. Job switchers earned a 7.8% increase in pay, but that number fell for the second month in a row and is likely to keep slowing. The figure for job switchers peaked at 16% a year ago. All right, the S&P PMI came out this morning. This is the global version, not the U.S. version, but it's important. We do also need to pay attention to global output. Global output growth was the fastest since 2021 as the upturn became more broad-based. The PMI survey sub-index of production, which tracks actual month-on-month factory output changes, signaled a fifth successive monthly expansion of production in May, with the rate of growth accelerating to the fastest since December 2021. That survey data are indicative of manufacturing output growing worldwide at an annual rate of approximately 2%. The production improvement was again led by Asia, but it's becoming more broad-based. So if you exclude Japan and mainland China, Asia recorded the steepest expansion of output for just over 3 years. And sustained growth in India was accompanied by accelerated upturns in other economies, such as South Korea and Taiwan. Rates of growth hit 34 and 29-month highs. However, growth was gained further momentum in mainland China to reach a 23-month high, and Japan saw output come close to stabilizing, recording only a marginal contraction. You know, Japan's been in trouble for a long time. Okay, and this also from Market Watch this morning. This is the Institute for Supply Management said on Wednesday that its service sector PMI rebounded to 53.8 in May from 49.4 in the prior month. Economists polled by the Wall Street Journal had expected the ISM index to inch higher to 50.7%. And this is a much bigger increase. So services, this is the first evidence I've seen that services were not continuing to shrink a bit. This will not be good news for the Fed. They're looking for services to shrink, to get down closer to that 50% or even lower number. Anyway, the ISM index dipped into contractual territory in April, but bounced back this month, obviously. This also coming in this morning, just before I went on the air, Bank of Canada has cut their rates by 25 basis points. So what does all of this mean for the stock market this morning? Let's go ahead and take a look. We've got Tesla now rebounding. It had been down as much as 2. It is down 92 cents right now. I don't think the stories that I just reported above were very helpful, although Ron Barron going on CNBC might be some help this morning. Now Tesla's continuing to head toward the green. NASDAQ is now up 182 this morning. S&P up 24, Dow Jones down 92. So mixed market this morning, but the directionality is positive. We have all of the Magnificent Seven in the positive territory. NVIDIA hitting more all-time highs, almost ready to go to 1,200, sitting right now at 33.89. So any minute now, we could be looking at NVIDIA over 1,200. We have got Meta also strongly up again today, but all the Magnificent Seven except for Tesla are up, and most of the Cathie Woods are up this morning. Okay, let's go ahead. Oh, I'm sorry, I didn't look at those percentages, but the percentages are: the Dow is down 0.24, NASDAQ up 1 full percent, S&P up 0.46, and Tesla down 0.5 at this point, continuing now only down 75 cents. All right, let's go ahead and take a look at the bonds. We have got the bonds sitting this morning. We've got the bonds down, the 10-year down 1.4 basis point, sitting at 4.322, so continuing down. The 2-year only down 0.6 of a basis point, so that inversion continuing to expand. The 2-month down basically unchanged, so that continuing to expand, also well over 100 basis points now at 5.393, yeah, way over 100 basis points. So the inversion is expanding. Whatever, again, it seems that that's a bad thing. And okay, we got oil prices this morning up a little bit, just 44 cents, still sitting at 73.70. Brent up also exactly the same. The natural gas up 3.94% this morning to 2.688, heading back towards the recent highs. We have got gold up 18 at 2,365 in the middle of its area, its range of prices recently. Silver up 0.77 also this morning, and copper up 0.73, all three up just about 0.7% this morning. Copper sitting at 4.57. We have got the dollar, the US dollar down a little bit against sterling. Overall, it's so hard to tell because some are up, some are down, but not a lot of activity, not a major move in any way, in any direction. We have got Bitcoin up 415, so strongly above 70 now at 70,800. Okay, I think that I'm just going to double check on Tesla. Now only down 64 cents. Looks like it's probably going to get into the green before long there if things continue along this way. Scott Walter, as mentioned, will be on later today. Brian White was on yesterday. If you missed that one, I'm going to put the card right here. It was, we talked about is the EV revolution just a fad? And we talked about whether it's, hybrid cars are smart. There's a benefit. There are a couple of things about hybrids that are smart. We came to the conclusion, as you probably have, that hybrids will not last for long, but for the next 3 or 4 years, there is a place for the hybrid. We talk about that place. I think it's worth watching that deal that we did yesterday with Brian. Okay, that's it. It has been great talking to you.